Information Wednesday, Shalise McQueen here. We're continuing the conversation from last week regarding life insurance. After all, it is Life Insurance Awareness Month here in September. Last week, I talked about some important buying features to consider when you're looking to purchase life insurance for the first time or even supplemental insurances. And today, we're going to talk about how to handle and some do's and don'ts when it comes to your existing life insurance policies that you have. Plus, reviewing the policy is obviously going to keep you up to date to who actually owns and services your policy. Nothing is going to be more frustrating for you or your loved ones in the event that you need to make a claim and you have no idea who to contact. So it's always good to be up to date in the know of who you need to contact in the time of need. And then upon life events, like I mentioned earlier, there may be opportunity to change up your policy. Maybe you took out a term policy back in the day because either it was more cost effective, it was a short-term solution, whatever that may have been. There's opportunities to convert term policies either into other terms or doing a permanent option. And with that, there also could have been an opportunity where your health improved. So maybe you did not get the best rate initially, but now you're much healthier, you lost weight, etc. And you could definitely benefit by having a new policy written, by taking new medical, and of course, getting a cheaper premium and rate every month. But the real reason why you want to make sure you audit and keep up to date on your life insurance policies is really to understand what kind of policy it is that you have. Who did you name the beneficiary of? Did you update your addresses? Things like that. Because as I mentioned, your need for life insurance definitely changes as years go on, as your family grows, as it shrinks, as you pay off your mortgages, your income changes. All of those are going to have an impact on what your life insurance benefit looks like and if it really has the same intention at inception as you need and have today. Term policies, again, they are meant to have a term, which means they have an expiration date, quote unquote. So it's important that you don't wait until you're age 75 or even 65 to have the conversation about converting a life insurance policy that was term or permanent, because just like anything else in life, the older that we get, things tend to get more expensive. And so ideally, if you take out a term policy at age, as I was saying, if you take out a term policy at age 30, say it goes for 30 years, you do not want to wait till age 60 to have this conversation. Same goes with a permanent policy. You may have taken out a policy with the intentions of it building a cash value, and maybe you did not properly fund this policy throughout the life of it, and you're now getting the nastygram letters from your insurance company saying that you have not properly funded it. The policy basically is near cancellation, pay up, which is never good for the wallet or for the budget. So it's really important to have these conversations ongoing every year to make sure that you're in the best place for your family, providing the protection that you need and intended. Now I'm going to give you 5 little tips and tricks of what not to do with your insurance policy. Number 1 is waiting to buy either subsequent policies or, of course, convert your policy. Like I said, age is unfortunately a factor. Age and health, and so you don't want to wait until you're later in life or you may have some health issues to try to get some new or improved insurance. Number 2, don't buy the cheapest policy you can find. The standard rule always applies. You get what you pay for. Maybe it's a substandard insurance company that may not be around in the time of need. It may not be a policy that really is benefiting you in the long haul. So just do your due diligence, shop around. Again, I'm always here to be a resource for you, whether it's to audit your existing policy, shop, or find out what the best route may be for you. Number 3, allowing premiums to lapse. Like I said, depending on what kind of policy you have, there is conversion periods, other opportunities. The last thing you want to do is go without. So have the conversation before it's urgent to make sure that, again, you have the protection that you need. Number 4, forgetting that insurance is an investment. Again, we have it for the protection of our family, of our loved ones. Debt does not die with the creator. It does pass on to our heirs of our estate. So do not leave behind a burden, leave behind a legacy. And then number 5, a lot of us do have life insurance provided through our employer. That is not the only life insurance you should be relying on. Again, you do not own that policy. The second your employment ends, that life insurance policy will end as well. It's a great add-on policy. I call it a little cherry on top of the sundae. So be sure to take advantage of what your employer provides you, because the policy likely is rather inexpensive in comparison to what you may have on your own, but it cannot be the sole source of life insurance and protection for your family. As always, thanks for tuning into the video. I hope you enjoyed our conversation. We'll be continuing the topic of life insurance next week. Again, it is so important to not leave behind a burden and leave a legacy. Life insurance is a necessity, not a luxury. As always, I'm here to be a resource for you. Give me a call at 602-525-5665 or email me at cmcqueen@farmersagent.com. Remember to ask yourself, are you protected? We'll see you next week.